Well, this was disappointing. What a big nothing burger this Fed decision turned out to be. As expected, the Fed cut rates by 0.25% to a range of 4% to 4.25%. So no news there. That was already priced in for weeks. But I told you guys, the Fed doesn't set mortgage rates. Because guess what's going on? Mortgage rates are going up right now. There's a sell-off of bonds at this moment, and the 10-year Treasury yield went from 4.05% down to 3.99 after the rate announcement, and the yield is now at 4.07%. That's the highest the 10-year Treasury yield has been in a week. In fact, all of the Treasury yields are up right now. So congratulations if you did not lock in your interest rate when I was telling you to do so. Now you're gonna be priced in a little bit worse. Should have listened. Right now, every mortgage lender and bank is repricing their interest rates for the worst. I told you guys this was gonna happen. All right, let's talk about what just happened with the meeting. The Fed is saying that the job market is cooling and unemployment has ticked up and inflation is still a little bit high. So much for inflation being transitory 3 years ago. All in all, the Fed is just balancing risks. Now, the dot plan, which is the projection of the Fed for interest rates moving forward, points to about a 3.6% by the end of the year. That's two more 0.25 or quarter point rate cuts if the data cooperates for this year. Anyways, the most exciting part of the meeting was Stephen Moran. Now, you might not know who this guy is, but he was just appointed yesterday to be the Fed governor by Trump. And he literally swung for the fences. Because while every other Fed chairman proposed a 0.25% rate cut, he wanted to see a 0.5% cut in this meeting. The other good thing out of this meeting is that the Fed is starting to realize that tariffs are not going to cause inflation as much as they thought. This is actually a good thing. They're more concerned about the weakening growth and the rise in unemployment. That's basically all that happened, guys. Listen, even though mortgage interest rates just ticked up a little bit, it still makes a lot of sense for most of you guys to look into refinancing those high interest rate mortgages, or maybe lock in those purchases if you are looking to buy a house. It's still a pretty decent time. Let me know in the comments what you guys thought about the meeting.